Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The Bank Promotion Exams 2025-2026 is a golden opportunity, and I am here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025-2026 a Welcome to part 16 of my Part to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers about case studies and group discussions to help you climb the career ladder faster. The subject is about some case studies for today. Previous case studies videos links are available in the description. First case study for today is the overdue cash credit account scenario. MS Sparkle Traders has a cash credit limit of rupees 5 crores. The account has had no credits for the last 95 days and the outstanding balance has been continuously in excess for the drawing power. The branch has not yet classified the account. Question: what is the status of this account as per IRAC norms? What immediate action is required? Solution: status: the account is out of order and must be classified as a non-performing asset (NPA). An account becomes NPA if it remains out of order for 90 days. Action: the branch must immediately run the day end process to classify it as an NPA substandard asset. A recall notice should be issued and the account must be transferred to the NPA ledger. Charging of interest must cease immediately. The next case study is provisioning for a substandard asset. Scenario: an account MS Prime Metals has been an NPA for 8 months. The outstanding balance is rupees 80 lakhs. The account is fully secured by mortgage of a factory building. Question: calculate the provisioning requirement for this account. Solution: a substandard secured asset code 21 requires a provision of 15% of the outstanding dues. Provisioning amount 15% of rupees 80 lakhs is equals to rupees 12 lakhs. Case study 3: the willful defaulter suspect scenario. MS Alpha Projects Limited (NPA) rupees 10 crores was sanctioned a term loan for machinery purchase. A stock audit reveals that the funds were used to acquire a commercial property, which is not the purpose of the sanction. The promoters are uncooperative. Question: what is this act called as per the policy? What is the first step in the formal process to declare them as willful defaulters? Solution: Act. This is diversion of funds. First step: the branch or zonal manager must submit a detailed memorandum to head office recovery department through the respective FGMO with conclusive documentary evidence recommending classification as a willful defaulter. This will be placed before the Identification Committee IC1. Next case study is OTS Delegation Challenge scenario. MS Beta Industry has an NPA account. The credit sanctioning authority for the original loan was a zonal manager. The borrower has offered an OTS where the sacrifice calculated on an ANAP of rupees 4 crores is rupees 1.5 crores. Question: who is the competent authority to sanction this OTS? Solution: as per policy, the OTS sanctioning authority is one level higher than credit sanctioning authority. Credit sanction by zonal manager is OTS authority is FGM-LCC. Check sacrifice allegation. FGM-LCC can approve sacrifice up to rupees 40 crores. The sacrifice of rupees 1.5 crores is within this limit. Competent authority FGM-LCC. The next case study is Surfaisi timeline scenario. The Gamma Properties account became NPA on April 1st, 2025. The branch is planning to take Surfaisi action. Question: list the key actions within deadlines as per the policy's time frame. Solution: issuance of demand notice US 13 by 13.2 by April 21, 2025, 21 days from NPA. Filing application US 14 for possession within 7 days after the 60-day notice period from 13 to ends, that is around June 28, 2025. Service of 30-day sale notice before e-auction after reserve price is approved. The next case study is agricultural NPA scenario. Shri Ramesh Patel, a farmer, has a term loan for a long duration crop. The installment of principal remains overdue for one crop season. Question: should this account be classified as an NPA? Justify. Solution: yes, as per policy, a loan granted for long duration crops will be treated as NPA if the installment of principal or interest remains overdue for one crop season. The next case study is calculating ANAP scenario. MS Delta Textiles NPA account has a ledger outstanding of rupees 2 crores. Uncharged interest calculated at 1 year MCLR from the date interest ceased till the current quarter end is rupees 15 lakhs. Question. What is the adjusted net amount payable? ANAP solution. As per para 7.3, ANAP is equals to ledger outstanding plus uncharged interest at 1 year MCLR. ANAP is equals to rupees 2 crores plus rupees 15 lakhs is equals to rupees 2.15 crores. The next case study is fraud account compromise scenario. An account declared as fraud with an original credit sanction by a scale 4 branch manager receives the valuable OTS offer. Question. What is the minimum approving authority for this OTS? Solution. As per policy for fraud accounts, if the credit sanctioning authority is below MCOM, the MCOM will be the approving authority for the compromise settlement. No board approval is required in this case. Next case study is non-cooperative borrower scenario. A borrower with an aggregate facility of rupees 6 crore is refusing to provide a stock statement or allow inspection of the hypothecated stock. Question. What action can the bank take as per the policy? Solution. As per policy, if the borrower is not cooperative for conducting a stock audit or valuation, the branch or zone should endeavor to classify or identify the borrower or promoters as a willful defaulter or non-cooperative borrower. The the 10th case study for today is project loan and DCCO scenario. A project loan for a non-infrastructure project failed to commence commercial operations within 1 year from the original date of commencement of commercial operations (DCCO). However, the account is regular as per the record of recovery. Question: how should this account be classified? Solution: as per policy, a loan for non-infrastructure project will be classified as NPA if it fails to commence commercial operations within 12 months from the original DCCO, even if it is regular as per record of recovery. Hence, account is NPA. The next case study is sale to ARC scenario. The bank is considering a sale of a financial asset of MSZR Limited to an asset reconstruction company, ARC. The account is a declared bill for defaulter. Question: what is the minimum sanctioning authority for the sale? Solution: as per policy for ARC sale, the minimum sanctioning authority will be AHLCC1. The next case study is staff accountability scenario. A branch is submitting a compromised proposal for a large NPA account. Question: what is the prerequisite regarding staff accountability as per Chapter 6? Solution: as per policy, the staff accountability report (SAR) should have been dealt with prior to submitting the proposal. The proposal must be accompanied by a staff accountability certificate. If SAR is not concluded, an undertaking must be provided to look into it within 30 days. The next case study is holding on operations (HOO) scenario. A viable SME unit has become an NPA due to temporary liquidity mismatch. The borrower is seeking permission to continue operations to overcome the cash flow problem. Question: what is the facility called? What is the maximum initial prior for which it can be granted? Solution: this facility is called holding on operations (HOO) as per policy. As per policy, HOO should generally be allowed for a period of 6 months. The next case study is recovery through Lok Adalat scenario. A suit filed NPA account with a claim of rupees 15 lakhs is not progressing in the DRT. The borrowing is willing to settle. Question: which forum can be used for a simpler and cost-effective disposal? What is the maximum claim amount that can be handled here? Solution: the bank can use the forum of Lok Adalat as per policy. As per policy, the maximum claim amount that can be dealt with by Lok Adalat is rupees 20 lakhs. The next case study is upgradation of NPA scenario. A borrower with multiple NPA facilities clears all arrears of interest and principals of four or less facilities. Question: is the account eligible for upgradation to standard category? Solution: yes. As per policy, loan account shall be upgraded from NPA to standard asset category upon repayment of entire arrears of interest and principal pertaining to all credit facilities. The next case study is guarantor's liability scenario. A guarantor who has sufficient means refuses to honor the guarantee after it is invoked by the bank. Question: what action can the bank take against guarantor under the willful defaulter framework? Solution: as per policy, a guarantor can be declared as a willful defaulter if they do not honor the guarantee when invoked, despite having sufficient means. The same process of show cause notice and committee review applies to the guarantor. The next case study is fresh lending after OTS scenario. A farmer who settled his crop loan KCC under an OTS scheme last month now approaches a branch for a fresh crop loan. Question: is he eligible? Is a cooling period required? Solution: yes, he is eligible. As per policy for agricultural accounts like crop loans, KCC fresh finance may be considered immediately upon closure under OTS without any cooling period. The next case study is EOTS scheme scenario. The bank launches a new OTS scheme called Bank of India Sahai for NPS up to rupees 50 lakhs. It's a formula driven non discretionary scheme. Question: Can this scheme be offered through an electronic platform EOTS? What is the basis for this? Solution: Yes, as per policy formula driven and non discriminatory and non discretionary NDND schemes can be offered through an electronic platform EOTS as pre approved offers. The next case study is deferment of legal action scenario. A branch wants to defer filing a suit against an NPA account for 120 days because the borrower has obtained a viable term sheet from an investor. Question: Who is the competent authority to approve this deferment, assuming the last credit sanction was by the zonal manager? Solution: As per policy, for deferment of recovery action where the last credit sanctioning authority was up to ZLCC, the approving authority is FGMLCC or SCGMLCC. The next case study is reporting of willful defaulter scenario. The review committee has declared MSXYZ Private Limited and its promoters as willful defaulters on June 1st, 2025. Question: To whom and by when this must this information be reported? Solution: As per policy, Recovery Department Head Office shall submit information on willful defaulters to all credit information companies (CICS) at monthly intervals. The names and the other details must all be published on the bank's website. Thank you very much for your patience. Please do like, share, and subscribe to this YouTube channel.